Thank you. Thank you. Welcome to the panel on real-world assets regulation, and also
No,
how they will.
We're missing someone.
Yeah, I don't know how long we want to keep the crowd waiting. Yeah, well, we're starting now. So, welcome to the panel on real-world assets and tokenization. I'll start with a brief introduction. I'm Elias Ahonen. I'm with Cointelegraph. I've been in the industry over a decade, and it's been extremely exciting to see things grow so fast from being a mere fake internet money or something like this that everyone accused Bitcoin of being, to becoming a blockchain infrastructure collective where we have all kinds of digital assets that are trading on the blockchain, where we have real-world assets tied to tokens, whether it's gold, whether it's stable coins, USDT, Euro stable coins, central bank digital currencies that are being created now by central banks around the world, whether it's in China or whether it's in Europe or the US. I believe there's efforts being made, which are a type of real-world assets as well. One of my involvements in this space is as a director of an exchange where, of course, digital currencies of all types are being exchanged in Africa. And in Africa, there's severe issues with inflation, for example, and lots of our users are looking for ways to tie their earnings into real things. Often that's been Bitcoin or stable coins, but we're also looking at ways to maybe in the future allow them to own stocks, allow them to own shares in real estate in different cities, even in the world. So maybe we'll start with some introductions from here. What do you do? Where are you from? And what's your involvement with real-world assets?
Thank you, Elias. My name is Peter Liu. I am the COO of Mantra. Mantra is a layer 1 chain, and we are focused on real-world asset tokenization. Our layer 1 mainnet just went live on Wednesday. Our token has been in issuance for about 4 years now and trades on Binance and OKX and KuCoin. It's a thematic play on real-world asset tokenization. I'm based here in Dubai, and we're in the middle of finalizing our VARA license applications.
Thank you.
Hi, everyone. How are you? Nice to meet you. My name is Matthew Mercadou. I am the CEO and co-founder of Magma. We are a platform tokenizing real estate. My background is in asset management and finance. I've been a real estate asset manager for over 15 years. I oversaw over 300 million of properties redevelopment. And now we are developing this platform that allows to create a digital asset of a real estate asset using a digital twin connected to blockchain as a representation of this asset. So glad to be here. Thank you for having me.
Thank you.
Hi, good afternoon, everyone. My name's Jerry Afantakis. I am with Zodia Custody, responsible for the region here. We are a digital asset custodian owned by Standard Chartered Bank, National Australia Bank, Investcorp, Northern Trust, and SBI Holdings, which gives us a very distinctive and quite institutional, let's say, shareholder constitution, which positions us in an interesting way in the digital asset space. Today, we are regulated in the UK, in Europe, in various jurisdictions, in Singapore, Hong Kong, Australia, and we have Japan pending, and we'll be launching our both VARA and ADGM regulatory process imminently here in the UAE. So we, as Zodia, custody any type of digital asset, from a Bitcoin to a stable coin to the digitalization of a real-world asset, and given our quite institutional both shareholders and customer base, we see the real-world asset movement as very exciting and key to our future growth.
So real estate was one thing that was mentioned here, and I think that's one of the most exciting applications of RWA tokens. And I think, put your hand up if you have ever used real estate. I would hope everyone here, everyone needs real estate, and it's notoriously difficult to buy. If you've ever bought property, I've actually never bought apartments or anything like that, so I haven't gone through all that process, but it's a long process. You have to deal with all kinds of lawyers, you have to deal with all kinds of paperwork, and that's all managed by one government or regional locality. And if you're not from that place, it's very difficult to buy something in a place where you aren't. If I wanted to buy something in Australia, I don't know how I would go about that. And the other thing with real estate is that it's expensive. I was just chatting with the property developers over there, and you know, it's million dirhams plus for a studio even here, and it seems that those property prices have gone up significantly. But what if I could buy 1% of a studio here in Ras Al Khaimah, for example? Because there's a lot of development happening here, not the least of which is RAK DAO, which is here and making this place hopefully the capital of the DAO movement. I think already is the fact that we're here today. But what if I could buy a share of that real estate and trade it on a decentralized exchange or an exchange? Would that make real estate easier?
Right, so let's talk about the elephant in the room. If we are talking about tokenizing real-world assets, let's talk about the largest asset class in the world. Real estate is a 370 trillion asset class, yet it is the most inefficient of all. If you compare it to stocks or bonds, it takes usually months to settle a transaction in real estate compared to stock or bonds. Why? It's due to the nature itself of this asset and that the different actors make the transaction privately. Only 1% of real estate is transacted on the public markets. So it's something that is much of a black box, and it is plagued with inefficiencies, lots of intermediaries, and you always need to update the state of the asset. And so that's why you have to take this long to settle a real estate transaction. But with the rise of technology and the digitization, now we have ways to keep track on the state of the asset and who is doing what in the asset. So we took the tokenization a little bit differently, not from the financial standpoint right away, because that will happen in a later time, but more from the asset itself. Know what you have. A lot of real estate companies, they don't really know what their asset is made of, what material, what equipment, the maintenance. All that information is very precious when it comes to assessing the asset. So what we build is a tool to assess a real estate asset and keep it up to date, which will later be connected to a financial tokenization tool that will allow to fractionalize the ownership of this asset and so on. But before anything, you need to know what you are buying. And for that, that's the kind of tool we're using, is digital twin, blockchain, AI, to connect to the asset itself.
Interesting points, Matt. And at Mantra, we see a lot of projects trying to come to tokenize assets in different forms. So, you know, I was speaking to Matt backstage. It's a very good approach to understanding what exactly you're dealing with. At Mantra, you know, we also are starting to look for what we call infrastructure solutions. So you talk about the inefficiencies of trying to buy and sell real estate. A lot of that has to do with verifying historical information, and that use of DLT applied properly can turn that into a highly efficient process with a lot of cost and transactional savings. The other thing as well is once it reaches the point of tokenization, trading it, it's quite easy to say, let's create a DEX or a decentralized exchange to trade the asset. That is currently quite challenging, and we're also working with market makers, we're working with industry participants to figure out how to create a market out of the tokenized asset. You know, obviously you try and hyper-fractionalize it into $10 tickets, but also, you know, those have to be supported. It's not that straightforward to create a club overnight and have market makers support what is an asset that's not really liquid to begin with. So those are challenges that tokenization will iteratively solve, and we're glad to be part of that solution at this time.
Thank you. That's really, there's deep questions here, and we missed an introduction from that side of the panel. So maybe you want to jump in and make a quick introduction about who you are, what you bring to the discussion on RWAs.
Sure. My name is Samir Safar Ali. I'm counsel at the international law firm Baker McKenzie. I'm also the policy and regulation chair at the MENA FinTech Association. And we're looking at a lot of these projects from all different crypto projects, whether it's exchanges, custodians, layer ones, actually exploring TradFi. So yeah, pretty sort of FinTech agnostic. But on RWAs, if there is a primary comment I would like to make, is that in order for RWAs to really kick off, there needs to really be a portfolio of laws and rules and legislations in order to support that. Because at the moment, there really isn't. And some jurisdictions around the world have got solutions to that. So for example, you may have heard of the Liechtenstein Token Act that recognizes a transfer in a token equals a transfer in the economic underlying rights to which the asset that the token references relates to. There is the same in Qatar very recently. There's the same in the DIFC very recently. But that doesn't, in and of itself, really facilitate. It's an important part, don't get me wrong, but it doesn't fully facilitate true tokenization yet. So, yeah.
Yeah, I think the lack of standardization is truly an aspect that is really slowing down the deployment of a real-world asset, tokenization. It's true that in different jurisdictions, they will have a different approach to what is a token. Is it a security? Is it a utility? And we have to keep in mind that while we are tokenizing assets, we are trying to do the same thing that traditional finance is doing or traditional industries are doing already. So we are sort of trying to do the same thing differently on-chain. The thing we have to keep in mind is that it opens a world of other possibilities. Because once you have a digital asset, you have something that you can carry on for all the life cycle of a building. And I talk for a real estate asset. Usually the life cycle of a real estate asset is 80 to 100 years old. And so you can carry this digital asset, and this information should not be lost when you change ownership. And so having the flow of information opens a world of possibilities. So we're doing the same thing, only better. So we need the legislator to understand that and start allow the issuance of, let's say, title on-chain, for instance. The thing with real estate tokenization is that you have title agents, for example, in the US, or in France, you have notaries. They are responsible for assuring the ownership of the property. So the legislator needs to allow on-chain issuance of title, for example, worldwide. That would be great.
So one of the big questions, as you just mentioned, is the bringing real assets onto the chain. And if you're looking at it from this traditional perspective, if you're dealing with traditional assets, how do you go about taking it and putting it on chain as far as regulations go? I think, Gary, you have some experience from that side.
I mean, we'll take art, for example. I think art's an interesting one. So there have been attempts to scan a really expensive piece of fine art. And then, you know, when you have those paints and the contours of the paint, there have been attempts, for example, to digitize that and then just embed that in the metadata, right? There have been attempts like that. There have been attempts with investment grade commodities, I'll just say, in terms of putting IoT tag even on it to say this, you know, in the NFT space, to say this token relates to this specific commodity. But these are all referencing, it's a reference game to say, you know, this is the best that we can do in order to say either in the NFT space, this token relates to this actual asset, or in the fungible space to say it belongs to, you know, the tokenization of a building or of copyright. I think I'll explain myself better in two examples. If we take, for example, copyright. If I own copyright to a song, if I sell or if I license part of my copyright to 20 people. The actual copyright itself, not a company that owns the copyright, but the actual copyright itself, that's not really a security. You can sell it. You write a song, you sell it to 2 or 3 people that want to monetize it, right? It's not necessarily security. If you have a real estate and you have a tenancy in common, say 8 people own a hotel building or a residential building, to sell your tenancy in common isn't a security per se. But as I mentioned, the law isn't there, so we're almost forced to explore corporate wrappers. And when you explore corporate wrappers, we're basically talking about tokenization of shares. And when we're talking about shares, we're talking about securities. So there is a way to do it abstractly. It's not true tokenization. And then we suddenly move from the vast framework to secured financial regulatory framework. And it ends up sometimes looking like a fund. And to do a fund, you need to be an asset manager or at least have a VC license, et cetera, et cetera. So, but look, the future could be different.
Yeah, it's a good analogy with fine arts, where you have the digital representation of the art. It could be the same in real estate. The representation of the building, this room like we are in right now, you can have the 3D representation of that room, and that's a store of value for the data of the asset. It records who has done what equipment reference it is, and everything. That's a utility. That's not a security. Once you now try to sell that space to several investors, that becomes a security. So you have to differentiate the digital representation of the asset, where you have all the data, and the financial representation, when you have ownership and different investors, and you have to protect the investors. And so those are 2 different things, how you can tokenize an asset.
Did you have anything further to add?
So I didn't hear that, sorry.
Sorry, Gary, did you have anything more to add?
Look, I think the future will be different, especially in jurisdictions that are pro-blockchain, etc. We spoke earlier on about, Peter can talk about this, about what we're seeing in Europe in terms of companies being able to, on-chain, issue their security and stock directly on-chain. So, yeah.
So, when I was just reading around about the market potential for RWAs, I mean, earlier on this panel, it was mentioned that currently DAOs control $25 billion of assets. And it was said that that's serious money. And it is serious money. But according to Coinbase, in some amount of years, whether it's 5 years or 10 years or 20 years, who knows, but they said that the amount of assets that will be collateralized and tokenized on RWAs is going to be in the realm of trillions of dollars. And that is real money, I must say. I mean, Apple is $2 trillion, Google is somewhere around the same area. We're talking about a form of asset that is probably going to hold perhaps a majority, if not at least a very serious part of all global wealth, according to the trends or the predictions. What do you make of this?
I think, it's a natural evolution of how transactions are eventually going to utilize more and more DLT technology. Again, I like to use this example of online shopping, right? 20 years ago, online shopping was very risky. Putting your credit card details on a website was pretty scary as well. It's like, what are you doing? This is your credit card information, your CVV and your expiry date onto some browser that you hardly even know is secure or not. But every year the technology got safer. Every year it got faster, and every year it got more convenient, and every year there was greater and greater adoption. I think, we tend to take this, there's a temptation to think that tokenization is a magic bullet. It's not. Over the course of this last 20 minutes, you've seen different versions of it, different jurisdictions with different approaches. Some people tokenize an SPV. It's kind of, a bit of an easy way of doing it. My tech guy has said, tokenization is very easy. It's 6 lines of code, right, that says this token is this thing. But if you don't have a legal framework to support it, then that's a meaningless exercise. So as you solve from that top layer down into how you actually represent the asset legally on-chain, which, by the way, you can do in certain European jurisdictions for certain asset classes, that then starts to solve certain efficiencies around how you sell, how you transact, how you record ownership, how you verify ownership. So I think it'll be an iterative process, and Mantra will be at the forefront of trying to engage with different firms with different solutions to that approach. But yeah, clearly, that multi-trillion-dollar target on-chain is something we're working heavily towards.
I have a question for Gary, actually. So, as a custodian, Zodia, are you seeing customers, institutional or otherwise, inquiring about custody of real-world assets, and how are those conversations going?
I think your natural digitizer of real-world assets is somebody who holds vast amounts of them. So that our client base, typical traditional financial institutions, asset managers having portfolio of real estate, portfolio of private equity transactions, are all looking at the benefits of digitization. And what does that mean? That means you can have a distributional competitive advantage, you can fractionalize, you can sell smaller shares. So we notice, and being Zodia, we end up typically as at least one of the first phone calls that these institutions make when considering their journey and realizing the need that these assets have to be held somewhere. What we do see is a lack. Everyone's working to a degree in a closed loop, in a kind of isolated ecosystem. I think we're all saying the same thing from different perspectives. And unless there's some kind of standardization, some kind of harmonization, almost globally, with regard to what you can do when you have a pool of tokenized assets, it appears that the big traction that everyone expects, hopes for, may be a little bit further down the line. And to the extent that we can, it's not our role in the world as Zodia, we try to socialize our clients with our stakeholders, with each other, to get dialogue going, to initiate collaboration opportunities, and really, to the extent that we can, and ultimately the big unlock will come from at a regulatory level, try to add value and add benefit by socializing people within the ecosystem doing the same thing.
Right. I think it has to go through industries. Industries need to come together to set standards, pretty much like aviation industry has done with the IATA, the International Association of Transport, where you take any plane anywhere in the world, it will be in the airport the same language. They describe a luggage the same way in Bangkok or in Taiwan or in Paris. By industry, we need to set language standards, ontology, on how you describe these assets. Once we do that, we can lock this information into tokens that can be either utilities or securities, and then exchange them, put them as collateral. Do pretty much exactly what the traditional system is doing, like I said, differently. But there is to be an effort made by industries to define things on the blockchain space.
So go ahead.
I was just going to say, I think that's a very good point, the standardization. The combination of actually having legislation and then having industry standards on top that can be a bit more malleable. I mean, for example, anyone who is involved in the conversation on AI regulation, that's what a lot of people they're saying. And we're seeing the same kind of topic coming over and over again in emerging and cutting-edge technologies, right? To say, well, the regulator can only be so far, ahead or catching up with industry. Industry moves far faster. So, having a foundation of laws, but then having a code of governance, for example, the IATA one you mentioned. I think a good one, by the way, for real-world assets is if you look at museums, if you ever go to a museum and you see like a little tag on whatever artifact it is, it's an ancient artifact. It's a bowl from Greece or, a painting from papyrus from Egypt. There's a little code, and the coding is international. Right, so and there's an organization of museums we will standardize how we label things. I think the same can be done.
Sorry to interrupt. Do you think that's realistic, right? Because and it's a serious challenge. If we can hit it, definitely, right? Luggage and museum tagging versus, and Matt, you talked about TradFi, right? Basically, financial DLT will replicate TradFi, and TradFi struggles to standardize financial regulations across jurisdictions. You cannot still sell a retail fund that is licensed in Hong Kong across in the US. It's still the same principles. I want to protect customers. I want there to be proper regulation of this fund, proper running of operational risk. But somehow, it's still a pipe dream trying to reach standardized regulation on that front.
Right. Maybe it's due to the analog process that it was difficult to do in an analog world. Now that we are getting into a digital world where you have a proof of things that are happening, if we use encryption, timestamp mechanism to know exactly who has done what and when, and we can cross-reference that data, we can maybe get to more sort of standardization than in the analog world where you have to rely on someone after the fact to verify that something has been done beforehand. So it's an all different world.
Well, an example of how that, a very good point. But I think the way that we've seen some analog to digital shift, an interesting example is music, right? So from vinyl and tapes, we've moved to MP3s. And when you look at an MP3 file, it's not just an MP3 file. There is, if you actually unpack an MP3 file, there are a lot of information fields, a lot of metadata that associate certain aspects of it, even artwork, right, to the actual song when it's playing. It's not just the artwork, but it's even copyrights and royalties all connected to that when it's playing, right? So I think that we don't have to copy the IATA or museums or even MP3. It's just a point to say there has been some, although they're all separate asset classes, right, or things that we're talking about, there have been efforts in other industries to try to identify something digitally and point to say it's, this code or this file, this token relates to this thing. It's one step towards this whole RWA initiative, but it's not the only one.
Can I jump in with a question for Matt, actually, who's tokenizing, real estate assets and portfolios as well, or just individual assets and portfolios? What, for you, would be the big unlock that would open market and allow your business to become, to reach its full potential versus where we are structurally right now?
So for real estate, most of the time, you cannot really completely have the process on chain because of the regulation regarding land registry and title. You have a registered agent in the US or in Europe, so you cannot put the entire thing on chain. What is going to trigger the industry right now is the need for compliance in reporting about the assets. Now, asset managers are facing a completely different market than a few years back, and they have to comply with a lot of new regulation concerning energy consumption. We have set targets to reduce energy consumption. We have set targets to reduce CO2 emission. We are entering a circular economy where we need to be more mindful of our resources. So you cannot improve what you don't know. So now the asset managers, they need to know their assets pretty precisely. So they need to have tools to monitor energy, equipment, and so on. So this is going to trigger the tokenization, because tokenization is about having a digital proof of things, of the assets, and that's what this new obligation bring to the table. So just by means of that, we will get to the tokenization of the assets.
Just in our final minute, since we are a DAO event, DAOs are going to be a major part of where these RWAs will be tokenized, how they're arranged, how they're controlled and voted on. Very briefly, I'll give everyone 10 seconds. You can give one major disadvantage or one advantage of having RWAs be governed by DAOs.
Elias, why don't you start with that one?
one disadvantage or one advantage?
No, but we want your opinion because we're
I'll
debating
start.
this.
So I think that the huge advantage is that corporate voting is cumbersome. It has to be done with mail. Sometimes I think putting it on the blockchain voting is a huge opportunity.
For me, DAO is a complicated animal that I don't know how to domesticate it yet. It's very difficult to have, community-based made decision when it comes to assets. So that's certainly something we would have on the roadmap. But as far as managing the entire platform, I think it's very much a long way for us. But it's interesting.
All right, we're out of time. Thank you, everyone.
Thank you.